FTX faces even more chaos, and China is coming back online. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. FTX was engulfed in more chaos over the weekend when it said it detected unauthorized access, and analysts said hundreds of millions of dollars of assets had been moved from the platform in suspicious circumstances. FTX filed for bankruptcy on Friday after traders rushed to withdraw $6 billion from the platform in just 72 hours, and rival exchange Binance abandoned a proposed rescue deal. FTX says it's working with law enforcement and regulators to mitigate the problem and is making every effort to secure all assets wherever they're located. China's National Health Commission has issued 20 rules for optimizing Beijing's zero-COVID policy. Certain restrictions will be relaxed to limit the policy's social and economic impact. Analysts say the easing of COVID curbs and the move to help real estate financing marks a major turning point in China's economic policies. Cities have reduced mass COVID testing and released people from quarantine camps, according to the new guidelines. The scope and degree of loosening remain unclear following the new rules. Meanwhile, Chinese property stocks and bonds soared this morning as the market cheered the extensive package outlined by Chinese regulators to shore up financing in the embattled real estate sector. Chinese authorities have unveiled sweeping measures to rescue the country's struggling property sector. It comes as regulators seek to offset years of harsh pandemic curbs and a real estate crackdown. Officials say the central bank issued a 16-point set of internal directives to promote the stable and healthy development of the industry. Closer to home, Saudi Arabia's public investment fund has completed the sale of a 10% stake in Saudi Tadawul Group through a secondary share offering, raising $611.7 million. The PIF sold 12 million shares through an accelerated book build offering. The PIF now holds 72 million shares, or 60% of the Saudi Stock Exchange operator and owner. Last year, the PIF sold a 30% stake in Tadawul in a $1 billion IPO, and the bourse operator's shares have since doubled. The IMF says the global economic outlook is even gloomier than projected last month, citing a steady worsening in purchasing manager surveys in recent months. It blames the darker outlook on tightening monetary policy triggered by high inflation, weak growth momentum in China, and ongoing supply disruptions and food insecurity caused by Russia's war. Last month, the IMF cut its global growth forecast for 2023 to 2.7% from a previous forecast of 2.9%. It said indicators confirmed the outlook is gloomier, particularly in Europe. Indian billionaire Mukesh Ambani is reportedly interested in buying Liverpool Football Club after it was put up for sale by Fenway Sports Group. The Reliance Industries chairman has inquired about the club, but he faces competition from other parties from the Middle East and the U.S., as Fenway Sports Group has reportedly been swamped with offers. It's willing to sell the club for $4.7 billion. Ambani already owns IPL cricket giant Mumbai Indians and helped to set up Indian football's Super League. And Marvel Studios' adventure Black Panther: Wakanda Forever brought crowds to movie theaters around the globe over the weekend, selling an estimated $330 million in tickets and setting a November record in North America. It marked the highest total ever for a film opening in November. Outside the domestic market, Wakanda Forever pulled in an estimated $150 million from Wednesday through Sunday. It ranked as the top grossing Hollywood release in all markets. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. Bye for now.